Okay, let's start discussing changes in Schedule 3. So first, changes in the share capital. That is, now company has to disclose the shareholding of the promoters. Like in this case, this is the TCS annual report. In this case, like this is the disclosure part of equity instrument. Now TCS is being showing like disclosure is of holding companies, number of holdings, and reconciliation of share. And if there is more 5% of more or aggregate in the company, if any shareholder is holding, in that case, or company has to provide. Now a disclosure has to be provided in case of a shareholding of a promoters, how much a promoter has been shareholding in the company. And another like in this format is it is to be given promoters name, number of share, and percentage of total share is been holding. And if there is a percentage change during the year, that has to be provided. Now next change is like if there is any registration of charges or satisfaction with ROC, like in that case, like from section 77 to section 87 of Companies Act 2013, if that has been registered, charges have been registered with ROC, in that case it is to be provided or disclosed in the financials. Now, and another like if there are number of layers of company, how many layers of companies are there, if that is not being complied with the section 2, in that case that is to be provided with, and name and CIN of the specified layers. Next, utilization of borrowed funds and share premium. Now from financial year 21-22, all the additional disclosure now to be provided in the financials, like how much utilization of borrowed fund and share premium is being there, and between like where company has advanced any loan investment funds in the entity, foreign entities, or to any other person or entities. Now that has to be provided with, or like in the case of directly or indirectly lend or invest in any other person, that has to be provided with, or with any ultimate beneficiaries to whom that has been provided with, or any guarantee security. Now another amendment in this case is short-term borrowing. Now in this case, current maturities of long-term borrowing shall be disclosed separately in this case. Current maturities of long-term borrowing, because in that case that maturity is to be provided within the 12 months period on means operating cycle. So that should be disclosed in short-term borrowing, not in long-term borrowings. Only the current maturity that is to be dealing within the 12 months period. Next, other current liabilities, like in this case, current maturities of long-term and current financial lease obligation, that has to be provided in previous slide. Like in case of short-term borrowings, that has to be omitted. Contingent liabilities and commitments. Now in this case, this is same, nothing is being changed. But in the case of like earlier, in the case of fixed asset is being used, but now PPE and intangible assets is being used. Wording has been changed. Like in earlier disclosure or like format, there is tangible assets part is there, or fixed assets. Now it is being substituted with PPE and intangible assets. Like in the, we can see that fixed assets and tangible assets have been removed, and now PPE has been inserted with. Now further amendment in this case is a reconciliation is to be provided with between the difference of gross and net carrying amounts. If there is change of if there is any change between 10% or more in the aggregate of net carrying value of such PPE, then in that case reconciliation or proper is to be provided with, and that difference is to be in case of any additions, disposals, acquisition of business combinations, amount of change due to revaluation or any depreciation or impairment loss, and that has to be provided separately also. Now in case of capital WIP, like capital is to be provided with long-term loans and advances, and now cannot be included in the capital borrowings. And capital advances and advances given for procurement of PPE and intangible, which are non-current assets. Now this is to be provided with additional regulatory information. Like in this case, this format is to be provided of in the financials in the notes. Like if there is any CWIP in the case of less than 1 year, or between 1 to 2 and 2 to 3 and more than 3 years, that has to be provided within project progress of that project, or like if that is temporarily suspended or not, and how much amount has been provided in that particular year. So that has to be provided in this format. And this is like changes how it is to be disclosed, how projection progress is to be disclosed, and what is to be disclosed or not at the reporting date, what's the status of that. Now further change, this is again the format. Now further, like in this case of promoters, director, KMP's holding or related party holding on the date of loan and amount obtaining outstanding at the date of balance sheet date. Like in the case of interim or like final balance sheet date, it is 31st March or interim date, that has to be provided with. Like following disclosure is to be provided in case of loans and advances in the nature of loans granted to promoter, director, KMPs, and related parties, and that is repayment on demand or without specifying any terms or period of demand. And amount outstanding at the balance sheet date or like interim date, that has to be provided of, an amount of loan that has been outstanding and percentage of total loan that has to be provided in this format. Next, moving to next. Intangible assets under development. Now there is change additional regulation in information to be provided with in case of intangible assets under development, following like in the case of CVP that has to be provided of now. Similar with the like earlier we have covered with capital work in progress. Now in with case similar with intangible assets under development, because CVP will transfer to PP, but intangible assets under development now further will be get classified in under intangible assets. So that has to be provided separately in the case of less than 1 year, 1 to 2, and 2 to 3, and more than 3. And if there is any project in progress or temporarily suspended off. And total shall tally with the amount of intangible assets under development in the balance sheet. Wait for a while. Okay, let's continue. We have covered this now. This is to be the format. Like in this case, project, any project wise detail to be provided with how many projects is being there. Now in case of non-current investment, no change has been there. Same with now in case of long-term loans and advances. Now in this case, security deposit has been eliminated. Now this is eliminated and to be provided in the case of now other deposits, other loan and advances now. Same other non-current assets, security deposits has been added now. Other non-current assets and under the heading. For the trade receivable outstanding aging schedule is to be provided with. This is the aging schedule. Like in the case of undisputed trade receivable that are considered good, and like in undisputed trade receivable that are doubtful, disputed and that are considered good, and disputed trade receivable that are doubtful. So there are 4 categories. 2 of undisputed and 2 of disputed, and further in sub classification considered good and doubtful in both the cases. And that is to be outstanding if that is less than 6 months, 6 to 1 year, and 1 to 2, and 2 to 3. And if more than 3 years, that is provided separately. And similar information shall be given where no due date of payment is specified, and in that case disclosure shall be from the date of transaction. अगर उसकी कोई हमें इंफॉर्मेशन नहीं मिल पा रही कि किस डेट से वो स्टैंडिंग है, उसकी क्या ड्यू डेट है, in that case date of transaction shall be used. Now in the case of now additional disclosure, title deeds of immovable property not held in the name of company, कि मतलब जो कंपनी की जो immovable property है उसकी टाइटल डीड कंपनी के नेम पे नहीं है, किसी और पार्टी के नेम पे है. Now that is to be given कि किस पार्टी के नेम है, उसकी ग्रोस वैल्यू क्या है, टाइटल रेट किस कंपनी के नेम में है, होल्डर क्या है, प्रोमोटर डायरेक्टर है, कोई कुछ पार्टी होगी वो तो रिलेटेड मतलब जो एंटिटी से रिलेट करी होगी, कब से हेल्ड है, किस डेट से हेल्ड है, अगर कोई डिस्प्यूट है कि नहीं है, दैट इज प्रोवाइडेड. पीपी इन्वेस्टमेंट प्रॉपर्टी, क्योंकि इन द केस ऑफ इंडिया पीपी एंड इन्वेस्टमेंट प्रॉपर्टी आर सेपरेटली क्लासिफाइड. If there is with PP active use, this is to be there. Now details of Benami property is to be there. Now in case of CARA 2020, this is additional disclosure in the case of CARA 2020, and that in the similar line with the Schedule 3 amendment. Details of Benami property held, how much details of such property in the when such property is being acquired, amount, details of beneficiary, if that property is being in the books or not, that has to be provided. If that is not in the books, that the fact shall be stated with the reason why it's not in the books. And if any proceedings against the company that has been started, that has to be provided. Nature of proceeding and status, what's being there, or company's views on the same. Benami properties, subject matter of Benami transaction also include proceeds from such properties. Now in addition, like willful defaulter, कि जो भी willful defaulter होगा बैंक से, defaulter जिसने किया होगा बैंक से, financial institution से, that disclosure is to be there. Date of declaration as willful defaulter, अगर बैंक ने हमें willful defaulter declare कर रहा है तो हमें that financial information declare करना पड़ेगा, या कि किसी और पार्टी को declare किया वहाँ पे. Willful defaulter here means a person or an issuer who is who or which is categorized as a willful defaulter by any bank or financial defined under the act or consortium thereof, in accordance with the guidelines on willful defaulter by RBI, that has to be dealt with. And like if there is any willful defaulter by in case of RBI or from any bank or financial that or any other lender, now in that case declaration of that willful defaulter and details of default to be there with. Now relation with stock of companies. Now in case of like investment is in case in any security receivable or payable, that has to be provided with. How much balance is being there and what is the relationship with the structure of company, that has to be provided in the section 248 of that Companies Act. Now it complies with the approved scheme of arrangement, where any scheme of arrangement has been approved by competent authority in terms of section 230 to 237, that shall be disclosed separately in the and accounted in the books of companies or not, and it is to be checked that it is in the accordance with the scheme or not, and in accordance with AS or Ind AS, and if there is any deviation, that has to be explained. Now, impairment of trade receivable, there are many, like in case of forward looking approaches being there, in that case general approach, simplified approach, or POCA approach, purchase originated credit impaired approach. In the case of general approach, entity has to recognize the ECL on the basis of 12-month ECL or lifetime ECL, and simplified approach is being there where there is a not a significant change in the credit risk, or like there is not separately track changes in the credit risk. The factor that has to be considered in the case of exposure at default, probability of default, loss giving default, and time value, that has to be considered. In the case of trade receivable and contract assets under the Ind AS 115, and that do not contain any significant financing component, in that case there only simplified approach to be provided with. And in case of like if there is a significant financing component and there is a choice between simplified or general approach, means 12 months ECL or lifetime ECL, that is to be provided out. Like simplified approach is also being can be there. Break of trade receivable into significant increase in credit risk and credit impaired, that is provided in the case following format: undisputed, 3 in case of undisputed, and 3 in case of disputed. Earlier in case there was 2 bifurcation, now in this case 3, that is considered good and credit impaired. And also that if there is any significant increase in credit risk, because in that case a lifetime ECL that is to be provided with, and that are considered good, or credit impaired, that 12 months ECL to be provided with due to that. And like in the case now further it is lease liability, and now earlier there was lease liability in the case of financial liabilities. Further in financial liability, that is provided with, now it is being substituted separately to be provided with lease liability. And the case of non-current liabilities and financial liabilities, that is to be separately provided with. Non-current liabilities, that is current or non-current. In the case of other current financial liabilities, 2 has been eliminated: current maturities of long-term debt and finance lease obligation, that has been covered earlier. Current lease, and also be provided in the borrowing heading, current liability, other current maturities of borrowings. So that's the end of the changes. Now further there are small 2-3 changes also that will cover in next part. Okay.